This has been the most powerful industry throughout human history. First off, read this disclaimer carefully. Let's look at the ETA, iShares US Aerospace and Defense ETF, and a leveraged option called Direction Daily Aerospace and Defense Bull 3X. DFEN is that ticker. Let's first look at the charts, then we will look at the internals of the ETF, and then we will have a segment about the biggest warlords in history. This is using weekly data points going all the way back here to 2006. This ETF gives you a bit of a mixed exposure. You get aerospace and defense, meaning this is not a pure play military ETFs. If we measure the bull market rally, it was 709%. But we have seen a major crash here. A significant part of this crash is due to the huge pullback we have seen in the aerospace sector, which to a very large extent is contingent on recreational use. Because it is relatively rare that you absolutely must travel by plane to some location. It's a highly discretionary sector. The interesting thing about the military industry is that it has enormous amounts of power. A lot of people make a big deal about the power of Wall Street and what Wall Street is able to get away with. Wall Street, the entire finance sector cannot hold a candle to what the military industry is able to get away with. So even in our times, yes, might makes right. And we see that very interestingly in Silicon Valley. The companies that refuse to do business with the military industry, they have a tendency to go away. Alta Vista was huge back in the day, but they refused to work with the military intelligence complex. They disappeared. And Google, coincidentally, is cooperating with the military industry. And if it chooses not to do that, or Microsoft also decides to completely block that industry, things will happen. Okay, well, let's look at the charts here. The reason why this is a very interesting ETF at this point is that one thing is that there's been an excessive sell-off, a large extent due to the aerospace sector. Looking further down the road, we are seeing increasing tension between USA and China. And in a broader context, due to the huge debt USA has on its books, there's a very high likelihood that America will start to flex its military muscles, maybe specifically against China, but also just generally speaking. I do think that we are heading towards a time of relatively significant turmoil. Looking at the technicals here, we have seen a timid bounce, nothing impressive at all. We are up 21%. Let's do the fib retracement from here to there. I mean, we did not even get 38% retracement. From a technical standpoint, sure, you could make a strong case that the bears are in control, given that we have seen some break of key levels. You could, however, put on the contrarian cap, that maybe the opportunities for the bears have kind of been run out. That there's a higher probability of some bullish opportunities, at least for the intermediate term. Looking at correlations, there is an 85% positive correlation between ITA and S&P 500. When we talk about the leveraged option, that's the DFEN, that gives you 3 times bullish exposure, meaning that if you think there will be some rally, or let's say when you see that there is some rally beginning here in this ITA space, then DFEN is a leveraged way to play that. And you can see that, well, let's actually just do a correlation study. Let's take DFEN here. We might not get it on the weeklies. Let's see. Yes, we actually do get the correlations here. That's rather interesting. Okay, so let's get the percentages here. Okay, there is a 96% positive correlation between the ITA ETF and the DFEN leveraged alternative. That's great. That's exactly what we wanted to see. Well, preferably we would want to see 100% positive correlation, but it was close enough. It's a decent correlation. Now let's jump to the daily data points here. Okay, let's get the data. I mean, the sell-off, it's been so tremendous. I mean, it's percentage-wise to the low here, it was minus 53%. That's huge. That really is huge. We did consolidate, but then we had a bit of a breakdown. But this was the breakdown was rather specifically related to what Warren Buffett did with his airline stocks, because he was like selling just completely out of those positions. Hence, that is why we had this breakdown. The question, though, about aerospace as well, let's go to jets. It could very well be that we are forming a bottom here in jets, and if we are, then the aerospace bad news are to a large extent priced in. Hence, it could be that the worst is also priced in here for this ETF. Clearly, looking at the daily data points, we do not have any sort of strength yet. We are literally below all the moving averages, hence it doesn't make sense at this point to put on a bullish position. But looking a bit ahead, I do think that it's with the bulls that there could be the biggest opportunities here for this space. Look here at accumulation distribution line. It's been deteriorating quite significantly. So there is a divergence here between the AD line and price action, a bearish divergence. Yeah, so keep this one on your radar. Okay, let's now look at ITA here. Sachs, they actually have a number to buy for ITA. If we go here to ETF.com, they have an A90 rating. Assets under management, $2.8 billion US. I have categorized it as follows. I have put ITA here under industrials. Here it is aerospace and defense. It is 28% from the lows, 52-week lows, 40% away from the 52-week highs. Here you can see some value and price action. The leveraged alternative is, if we go here to the bull, sector bulls, here we have it, aerospace and defense. This one is 84% from the 52-week lows, hence the leverage effect is rather significant. Of course, if you are going to hold a leveraged product like DFEN over multiple days, you have to watch it extremely carefully, because these leveraged ETFs are infamous for diverging from the underlying index over time. They are only technically meant for holding for one day. Hence, I would consider this actually a rather sophisticated product. I mean, it is for the sophisticated investor. Okay, back here to ITA, let's look at the companies. Here you can see some price-earnings ratio. It's 18. Let's actually compare that to the S&P 500. Okay, so let's go here and get the SPY ETF for the S&P 500. Okay, so price-earnings ratio here is 18. Price book is 4. So let's compare 18 and 4. Yeah. Okay, so as you can see here, yeah, especially when it comes to price book, aerospace and defense is quite significantly higher than the S&P 500. Though it's important to bear in mind that the S&P 500, it is a very broad ETF. This is a very specific industry. and the price book ratios and price earnings, they vary very significantly between industries. Here you can see the top 10 holdings: Lockheed Martin, Raytheon Technologies, Boeing, L3Harris, Northrop Grumman, General Dynamics. Some of these are pure play military stocks like Raytheon and Lockheed. Boeing, of course, they have a mix of military and civil purpose vehicles, I guess. Aerojet Rocketdyne. These are really interesting companies, and it is quite well, it's not a big surprise that you have some more elevated price book here, given that some of these are high-tech stocks. Let's now look at the biggest warlords of history. Okay, so this theme is called modern warfare. So the biggest warlords. Okay, this is a selection, but these are the ones that made the biggest impact on the world. You get Ramses II, 1303 to 1213 BC, Egypt. Then Sun Tzu, who wrote The Art of War. China. Leonidas, Sparta. Alexander the Great, Greece. Got Hannibal Barca, Tunisia. Julius Caesar, big name from Rome. Got Genghis Khan, definitively made quite the impact. Let's continue. Then you have Napoleon Bonaparte, France. Frederick the Great, Germany. Ulysses S. Grant, USA. Adolf Hitler, Germany. Joseph Stalin, Soviet. And then you get Douglas MacArthur, USA, 1880 to 1964. It is very interesting to look at how people reacted to these rulers before their reign, during their reign, and after their reign. Because there have been some huge differences. So I definitely recommend to look a bit into that. To sum up, when it comes to ITA, I think that there will be more interesting opportunities in the nearer future for bullish opportunities, which is why I highlighted the DFEN leverage product as an interesting way to trade that. Currently, the technicals do not scream bull at all, but I would put this on that radar. If you are looking for short selling opportunities, I think that there are better plays than this. Let's look a bit at what's happening with USA. The S&P 500, well, let's actually look at the futures, because they give us more data. Like that. Okay, so here is the S&P 500 futures. The market has opened. We do have a very bearish cross here. 100-day crossing below the 200-day moving average. The bulls are in control as long as we are able to hold this purple 20-day moving average. It's a very important moving average. The 20-day is common in many technical indicators. As an example, in the Bollinger Bands, they also rely on something quite similar to the simple 20-day moving average. Support, 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 support. The tricky situation for the market is that even though the economic data is deteriorating, paradoxically that is actually bullish for the markets, because as long as the economic data is bad, the market knows that the central bank will be very accommodative. And if the economic data actually improves, then you will likely have the central banks relaxing their intervention, which could then, quite paradoxically, be bearish for the markets. The major issue for the central banks globally at this point is that we are at a very different situation than what we had in the financial crisis. So here we have the WT, the big picture ETF. This is like total world stock market, and here we have the financial crisis. And at this point, the central banks around the world have pushed it pretty darn far. meaning they had used a lot of their firepower. At this point, at this very moment, they have, it's very hard to see what they can do next. There are many countries with negative rates, interest rates, and there are quite a few countries that are about to go down that road. In Norway, the interest rate was slashed to 0 today, and while I strongly discourage anyone to fight these central banks, it is very prudent to be very skeptical of their actions, because they have pushed it really, really, really far. And if we take, a bird's eye perspective, looking at all of human history, it is quite apparent that there have been many different economic systems, many different superpowers, and that also means that the previous economic systems we had collapsed. They completely collapsed. It is extremely unlikely that we have invented the perfect economic system. There's obvious pathologies with the current system. Hence, I do expect that we will see something similar to what we've seen in the past, that it will unravel, which will most likely be in the form of a legitimacy crisis, I think, in our specific case, because our monetary system is make-believe. Whatever you do, of course, you want to let the trend be your friend.